Okay, that's good. Pablo, good to see you. How you doing? How you been? It's good to see you, brother. Pure, good to see you as well. Evening, how you doing? How you been? Good evening, Miles and CMF. Hope you're feeling better. Tall, good to see you as well. How you doing? I'm feeling a lot better. Good to see you as well. Michael, how you doing? How you been? How's things? Good to see you doing better, brother. Let's go, Pablo. Good to see you. Good to see you as well, Michael. How you been? Evening, Miles. Mac, good to see you as well, brother. How you doing? Evening. Miles, how you doing, man? I'm doing a lot better. Good to see you, Theos. How you doing? I'm doing a lot better than what I was initially. But yeah, it was a tough stage, but I've passed that and I'm a lot better now. But thank you for asking. It's good to be back. I miss doing the live shows. I miss the CMF. Good evening, Miles, and all CMF. Welcome back. Let's go, JP. Good to see you, brother. How you doing? Morning, Miles and CMF. Great to have you back, Miles. Good to see you as well. Shelly, how you doing? Denise, great to be back. Let's go, Denise. Good to see you as well. Hope you're on the mend now. I am, Pure. I am definitely am 100%. Good evening, Miles and family. So glad you're back and feeling better. Let's go, Carlos. Good to see you as well. How you doing? Happy Pisces. Good to see you as well. How you doing? How you been? Hi, Miles. Hope you're feeling better. Missed you. Good to see you as well, G. How you doing? How you been? Missed you as well, brother. Hi, Miles and CMF. Dennis, good to see you as well. How you doing? How you been? Good evening, my friend. Good to see you as well, Curtis. How you doing, brother? How you been? A lot of things have happened since this week that I took off, mainly due to an infection that basically spread to my lower back. And it made it difficult for me to be able to walk or stand or even lay down. But with the help of the doctor and the medication I was prescribed, a lot better now. I'm able to sit down, lay down, and stand up and walk. Basically, everything Biden struggled with on a daily basis is what happened to me for about a space of a week. But I'm feeling a lot better now. Still on medication, but feeling a lot better now. Good evening, my friend. The Dawn is back. Great to see you, bro. One love. Good to see you. How you doing? How you been? Now, a lot of things. And by the way, I just want to say, just take a few seconds here and a few minutes to say thank you so much to everyone from the CMF for all the nice messages, all the support, and for everyone that also called me on Telegram or on X to see how I'm doing as well. Thank you so much to everyone from the CMF for the messages, for the phone calls. Absolutely amazing. Love you all. And also, the second thing I was going to say is a lot of things have happened during this week that I've been essentially not be able to do anything. A lot of things in terms of contracts have been happening with Trump. A lot of things that have been signed domestically or internationally in terms of contracts and businesses and the tariff situation. It turns out that it seemed like China isn't as strong as they perceived to be on the media and said, they will stand against Trump and the US and so on and so on. Turns out China was actually quite weak, in a very weak position, which ended up essentially having some negotiation talks with the US and Trump, which is brilliant to see because, we want the relationship between the US and China to, come together smoothly so we can move faster past that and have a much more essentially positive outcome towards the market space, towards the crypto market space in general. But it's nice to see China caved finally after that whole persona of, they're stronger than the US, and which in reality they would never were. And I said that a long time ago, that China is just giving some weird, essentially obsession that they're going to beat the US in some sort of way. They're never going to. The US is the strongest country and is the most powerful country on this planet. Some people don't like hearing that, but the reality is the reality of it. Now, a lot of things to discuss on tonight's live show. A lot of things that happen inside the crypto space as well. But before we go through any of these news topics, just want to say to everyone watching right now, welcome to the CMF live show. If you're watching for the first time ever, the CMF stands for Crypto Mouse Family. And in this live, I always talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about this whole world transforming into this digital, essentially digital future we're heading towards. We also do Q&As on this live show as well, which means if you do have any questions, put it down inside the comment section. More than happy to help out any one of you, any questions you may have, or even statements to make inside the comment section. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Great to be back. Episode 307 of the CMF Live. And thank you so much to everyone also who's watching right now who has liked this live on X. If you're watching us on X, thank you so much to everyone from the CMF who has liked this live, who's retweeted this live, who's put a comment outside the live, you know, hashtagging Trump, hashtagging the XRP Army, hashtagging whoever you want inside the crypto space. Thanks so much for that. And if you're watching us on YouTube as well, who you've also liked the live as well, thank you so much. And for everyone that's put a comment outside the live as well. If you haven't done that, CMF members, just take 5 seconds to like the live and retweet it. It does genuinely help to grow this family so we can help a lot more people who might be stranded inside the crypto space. Now, a lot of things to discuss on tonight's live, but before we go through the first news, all the rest of the news that we're going to go through on tonight's live, let's go inside the comment section first, and then we go straight into the first news. So let's see where we're at. Abram, nice to see you back. Good to see you, brother. How you been? Nice to see you're feeling better. Glad you're out and about. Let's go, Semper. Good to see you as well. We're happy you're feeling better now. Let's go, Theos. Thank you so much, brother. Hey, Miles, what do you think the impact will be on XRP on 19th with XRP futures? We would honestly have to see what the impact is going to be. XRP ETFs will bring a lot more money, but that has been postponed by the SEC. And once again, we're going to discuss regarding postponing from the SEC. But let's see. The ETF is the bigger number. Welcome back, Miles. We were solely missed. Let's go, Michael. Thank you so much for the kind words. Hello, Miles. Burberry, good to see you. How you doing? How you been? Good evening, Miles and CMF. So nice to see you back and feeling much better. Let's go for forever. Good to see you as well. Evening, Miles. Lee, good to see you. How you doing? How you been? XRP, let's go, Jermaine. Facts. Legendary token, legendary project. Ian, good evening, Miles and family. Great to see you back. Looking good, brother. Let's go, Ian. Thanks so much for the kind words as well. Welcome back, Manny. Let's go. Good to see you as well. Now, first news on tonight's live. As I said, there's been a lot of things that's happened this past week that I didn't do the live show due to having a very, very weird illness that I had, with my whole lower back situation, which I'm feeling a lot better now. But first news on tonight's live is Bitcoin accumulation. So a lot of Bitcoin accumulation has been happening right now, and it's due to essentially the US and China trade essentially battle coming to a pause for about 90 days. It's also the positivity of the US essentially and the Middle East fixing that relationship, all the sanctions that's been lifted from a Middle Eastern essentially country. Trump's done a lot of positive things that's led to some positive outcomes towards the crypto market space, and one of them has been the positivities bringing to the crypto table. Also, with the deals that Trump has been making with the Middle East, essentially American crypto projects have also went across the pond to the Middle East and did their own deals alongside Trump, which was great to see as well. Now, Bitcoin accumulation trend highlights a price surge potential is on the way. The accumulation of Bitcoin suggests potential price troubles ahead and a shift in market liquidity. So what's been essentially happening right now is a lot of people are saying inside the crypto space that money is going to be X because the Bitcoin domination is down. A lot of people are saying inside the crypto space, and the charts do show somewhat of that, essentially Bitcoin domination is a little bit down. Money is going to be exiting and essentially just like always, entering to Ethereum, then entering to the rest of the old crypto projects. And then we have alt season, just like always. But one main thing people aren't considering is that everything's pretty much changed, and it changed the day essentially we had institutions coming inside the crypto space. It changed the day Trump became president of the United States and essentially said the United States can become the capital of cryptocurrencies. It changed when every country decided to do their own versions of a Bitcoin ETF. It changed when essentially every American state decided to create their own crypto wallet, for example, or countries designed crypto and crypto wallets, or banks getting involved more inside the crypto space, or institutions getting involved more inside the crypto space. And the regulations we're having right now, wave of regulations we're having internationally, domestically, in every country happening. So these are things that a lot of people aren't considering, but they're essentially just considering what's happened in the past as continuation of what's going to be continuing inside the crypto space for eternity with the 4-year cycles. And that's incorrect. I mean, we've even had the CEO of Grayscale come out and say that this is an institutional run we're going to be having due to the amount of institutions inside the market space, due to the amount of regulations that are essentially being waived in, of voting in, and so on and so on. We've also had Standard Chartered Bank's perspective on the matter regarding this is what we're going to be having very soon is an institutional run. We've also had essentially Franklin Templeton's analyst essentially come out. JP Morgan's analyst Nicholas has come out and said, we're going to be having institutional run, a regulated run is what we're heading towards, not that typical alt season which everybody expects. Also, you've got to consider in the past, the only money that was inside of Bitcoin was majority retail section from what we could tell. We couldn't tell if there was institutional money or not because we don't know who the wallet holders are. But let's just consider the fact that, essentially in the past, it was majority retail section inside of Bitcoin. Let's just consider that fact. That's the only reason it worked in the past is because retail money would exit Bitcoin. Now, we've got to consider Bitcoin ETFs. And people aren't considering the fact that Bitcoin ETF holders who are buying through BlackRock, who are buying essentially through, as JP Morgan's scenario, but who are buying essentially Bitcoin ETFs, they're not going to sell their Bitcoins and start an alt season for us. So essentially, the same movements we had inside of crypto space should not be expected to repeat itself when we have Bitcoin ETFs in place, because none of those Bitcoin ETF holders are going to sell their Bitcoin ETFs to start an alt season for us. So technically, what we're actually going to be having inside of crypto space is a regulated institutional utility run is what we're actually going to be having, not that typical selling off Bitcoin to Ethereum to altcoin season starts. That's not what we're going to be having, because there's not a single essentially person from the institutional sector who is, or a high profile investor who's going to sell their Bitcoin ETFs to start off alt season for everybody else. So that's not the typical run we're going to be having. The run we're going to be having for the past year, I've been saying, the more we go towards regulations, is essentially a regulated institutional utility run is what we're going to be having, not your typical alt season. Because name me one essentially Bitcoin ETF holder from essentially Wall Street is going to be selling off their Bitcoins to start off alt season for everybody else. It's just never going to happen. The reason why they brought Bitcoin ETFs is because it's an ETF. If they wanted to do that, they could have brought any other crypto token on the market space. Now, so here is essentially it. On-chain data provides, such as essentially Glassnode reports, that an increase in the Bitcoin creation trend score fueled by both large and small wallets. This activity reflects a marked increase in Bitcoin holdings. Influential essentially analyst firms also sentiment highlights the whale wallets added 83,105 Bitcoins recently. The aggressive accumulation from these large wallets inside the Bitcoin space, it may be a matter of time until Bitcoin essentially is coveted to $110,000. An all-time high level is breached, particularly after the US and China tariff pause that's just happened for 90 days. Now, this was a perspective from essentially Sentiment's analyst provider, Sentiment Technologies, which essentially do provide, market perceptions and how they think market is going to be playing out. The accumulation trend affecting both large and small investors places upward pressure on Bitcoin prices. Notable inflows in Bitcoin ETFs further support this trend, while recent pricing shows that Bitcoin trading between $78,500 and $84,700, and essentially right now, on that mark of $103,000. The broader implementation includes potential new price, essentially peaks, and heightened market activity across correlated assets like Ethereum and the rest of the crypto space. The assassination essentially trend score exceeding 0.5 alongside ETF inflows indicates a strong market confidence. Expectations revolve around historical BTC accumulation trends. Previous events have essentially often led to price surges. Current data supports a bullish outlook, potentially moving towards a new historically high prices. Institutional participation remains quite high, reflected by consistent ETF inflows. Technology advances and historical data suggest a strong upward trajectory, though essentially through the market dynamics remain complex. Bitcoin's potential essentially gives it a considerable position inside the market landscape. High-level US and Chinese officials. Now, regarding the US and China situation, which is added that positivity towards the crypto market space, making it less volatile than it was. So the high-level US and Chinese officials agreed to pause their tariffs, sparking rallies essentially inside of tech stocks and Bitcoin and cryptocurrency market space in general, easing easing the market space on that situation with China and the US. The tariff essentially pauses has raised investor optimism, leading to a surge in essentially, a confidence of a surge inside the crypto space as markets, essentially stakeholders anticipate benefits from reduced trade tensions between the US and China due to their pause. The US and China have agreed to a tariff reduction deal facilitated by essentially Swiss officials. This announcement essentially comes after previous trade tensions impacted financial markets, highlighting efforts to stabilize the economic relationships between these two essentially nations. Now, Jameson essentially and the Chinese trade officials led negotiations in Geneva. Jameson noted that it's important to understand how quickly we are able to come to an agreement, which reflects that perhaps the differences were not so large as may be thought. The agreement marks a strict step in addressing the US trade deficit concerns, aiming for more balanced economic trade. Investors reacted positively, with major tech stocks and Bitcoin experiencing, essentially confidence inside the market space and the crypto space. The announcement has bolstered market essentially confidence, suggesting potential economic stabilization between the US and essentially China due, to this 90-day pause. And essentially, the historical data suggests such a geopolitical events often essentially spur rallies in traditional and digital assets, showcasing investor optimism towards these assets. Similar tariff pauses back in 2018 and 2019 led to rallies essentially in risk assets. This essentially current pause further essentially in the historical tendencies for risk-on sentiments and geopolitical eases. Experts suggest that continued dialogue could strengthen market positions, and historical trends underscore potential for sustained rallies in tech and crypto markets should trade essential relationships remain favorable for both essentially countries. Now, regarding US and China, it was bound to happen. China was feeling the pressure a lot more than the US was, even though there's some news channels or some journalists might have said it the other way around, that the US was feeling the pressure from China. The reality of it was China was feeling the pressure from the US. There was factories that were closing down in China. The banks were in trouble in China. The real estate market space was in trouble in China. And not saying the US was trouble-free. The US had its own troubles going on as well with the trade tensions. But China's troubles were way above essentially the US's troubles. And that's why China essentially had no choice but to come to the negotiation tables, which I'm happy they did. And they finally realized that they're not as strong of a position they thought they were against the US. China obviously will be essentially in a better position against most countries around the world, but they will never be in a better position compared to the US. It's just not possible. Maybe in about 100 years' time, maybe they have a better position. But for the time being, the reality of it is China's ranking number 2. The US is always going to be ranking number 1. That's the reality of it. This is, essentially in the past, this has caused the crypto market space or risk on assets to do quite well for themselves. But now also considering the fact of all the contracts that Trump has done, the Middle Eastern contracts that essentially happened yesterday or even today, some contracts are happening. While Trump has went to the Middle East to do some new contracts and bringing a lot of money for the US, that's bringing essentially confidence back towards the market space, the stock market and the crypto market. Even the markets aren't still rallying, it still has brought confidence back towards the market space. Now, alongside Trump, crypto company CEOs have also went essentially to the UAE, to the Middle East. They went to Saudi Arabia. They went to essentially Qatar, Bahrain. There's a multitude of essentially CEOs of blockchain companies that have went to the Middle East because Trump went to the Middle East as well to do their own contracts, essentially to do their own deals and expand the crypto market space. This is incredible to see. So this is essentially what what we've essentially been waiting for. And this is what people need to be looking out for right now. What you need, if you want to be ahead of the game inside the crypto space, the only thing you should be looking towards right now is how many contracts and relationships are being built domestically or internationally for the crypto space, and what regulations are coming into play for the crypto space. That's pretty much all that's going to spark the market space, because the ETFs are going to cause bursts inside the market space without a doubt. If we get essentially a XRP ETF, a Solana ETF, an AVAX ETF, a HBAR ETF, a Doge ETF. These ETFs will cause sparks inside the crypto space and mellow down and cause more sparks and essentially a burst of liquidity coming inside the market space. No mellow down, have another burst depending on which crypto token it is. But what's going to cause essentially the crypto market space to stay at that high level, or utility crypto projects to stay at that high level, is the regulations. That is what's essentially going to make certain crypto projects, utility crypto projects, stay at that high level. So if you want to be ahead of the game, it's not really the Bitcoin essentially domination, the Bitcoin charts in terms of the Bitcoin domination charts you should be looking into. It's mostly you should be looking towards what regulations are being passed for the crypto space now, because these are vital times. There's a lot of contracts being made right now, and what contracts are in play for the crypto space internationally, because a lot of contracts being made internationally. And Trump is, alongside Trump, as I said, there's a lot of blockchain CEOs in the Middle East right now making a lot of contracts, which we're going to talk about some of those contracts that are happening in the Middle East for blockchain companies. But yes, if you want to stay ahead of the game right now inside the crypto space, two things you should be looking out for. One, essentially, which contracts are being made in terms of the blockchain space alongside Trump's contracts, and two, what regulations are being passed for domestic purposes and for international purposes. Now, obviously, the regulations that can be passed are more essentially bank-based, more finance-based, which is what we really care about, to be fairly honest. Obviously, there are certain categories inside the crypto space that are very important as well. The Web3, the data, the gaming, and the AI, and so on and so on. The number one category is the finance category. So the Stablecoin Act that's being passed essentially, and the banks being able to use crypto assets, those are things you should be fixated on, because the next run we're going to be having isn't essentially the typical 4-year essentially altcoin season, Bitcoin fitting into Ethereum fitting into the altcoins, and there we have a rally. That's not really what's essentially going to be happening. The Bitcoin ETF holders are not going to be selling off their Bitcoins to buy into Ethereum, then they're funded into altcoins. What we're going to be having, as essentially said by Grayscale CEO, by essentially analysts from JP Morgan, Nicholas, and other major analysts from essentially Franklin Templeton, Standard Chartered Bank, even UBS Bank, essentially, so on, have all said what we're going to be having now is a very regulated institutional utility run, is what's going to be happening inside the crypto space now. And we are headed towards that with every positive thing that's happening right now with Trump in play. Now, regarding the SEC, so the SEC's essentially delays have happened again on ETFs. So here it is. SEC delays decisions on Solana ETFs, Polkadot ETFs, essentially on Solana ETFs, and Polkadot and XRP are pretty much next in line for that ETF of yes or no. So the Securities and Exchange Commission, SEC, has postponed a decision on essentially proposed spot Solana ETFs, shifting the crypto industry's attention to June deadlines for funds on Polkadot and XRP ETFs. According to a document, essentially, the US regulators have delayed a decision to list Grayscale Spot Solana Trust ETF on the New York Stock Exchange. Now, the SEC typically delays essentially their decisions of in between 45 days to 60 days, or up to 90 days, or to a maximum of 240 days. They can delay their decisions. So a final decision essentially is expected for Solana ETF by the end of 2024 or even early 2025, depending on essentially the original filing date. Now, this comes essentially weeks after the SEC has delayed its reviews of the Canary Capital, essentially Litecoin ETF application, as well as reported essentially by Bloomberg Intelligence, essentially analyst James. Now, spot ETFs are also considered key drivers of liquidity and institutional adoption of digital assets. For Bitcoin, essentially, US spots ETFs have driven a significant amount of share of new investments since their launch, helping essentially Bitcoin return to the $50,000 mark and essentially above mark back in February 2024, 1 month after those funds began trading. Whilst the Solana ETFs essentially may only attract a fraction of essentially what Bitcoin ETFs brought to the table, it still has the potential to increase institutional adoption for Solana, having that chance of an ETF in play if it gets approved, but it was essentially postponed. Despite the latest delays from the SEC, investors remain optimistic that Solana ETFs will be approved before the end of essentially 2024. Now, according to data from essentially Polymarket, the largest decentralized essentially betting platform, investors recently predicted approximately 82% probability of Solana ETF approvals and an 80% probability of Litecoin ETF approvals by the end of the year. Although these figures essentially do fluctuate and should be checked from most essentially current data, but just to put in perspective, these are what people are betting on of a chance of happening, betting real money, real crypto money, of betting what's going to be happening. Now, several other crypto ETF filings essentially approaching the SEC's June deadlines are happening as well. The SEC will decide on Grayscale's Polkadot ETF by June 11th. Keep that essentially in your calendars if you're somebody that's holding Polkadot. And essentially for 21 shares, Polkadot ETFs by June 24th, according to documents from the regulators. On June 17th, the Securities and Exchange Commission, SEC, is due to make a decision on the Franklin Templeton XRP ETF and the Bitwise essentially spot Dogecoin essentially ETF as well, official documents show. So if you're essentially an XRP holder, just as I am, June 17th essentially should be on your calendars. Now, however, those decisions could also be delayed. The SEC does typically use the full 240-day review period when evaluating crypto-related financial products, as seen as review applications for Bitcoin and Ethereum ETFs. Just to put in perspective, the Bitcoin in ETF applications timeline shouldn't really be considered for the rest of the ETFs. Yes, obviously some ETFs have been delayed, but we've got to consider that we do not have Gary Gensler in play anymore. The reason why Bitcoin ETFs and Ethereum ETFs took a long time to get any sort of approval was because of Gary Gensler. So now we do have a very pro-positive crypto SEC going on right now, even though they are delaying some certain decisions here and there. But still, in reality, we do have a completely new SEC, so the timeline could be a lot more faster for a lot of these ETFs. Not for every single one of them, but for a lot of these ETFs to consider. However, these decisions could also be essentially, the SEC typically uses that 240-day essentially period that they can use as seen as reuse applications back in 2020, regarding Bitcoin Ethereum ETFs back in 2023 and 2024. Notably, the final deadline for spot Ethereum ETFs in May 2024 and not June. So, if you're somebody that's waiting for essentially more ETFs to be happening inside the crypto space, those are some of the deadlines. Essentially, Franklin Templeton's ETF for XRP ETF, June 17th. June 11th is for essentially Grayscale's, essentially Polkadot ETF, and Doge's, essentially if you're somebody who's holding Dogecoin, Bitwise, essentially spot Dogecoin ETF, also around June 17th as well. But Solana ETFs have been delayed. Now, they could go essentially, as I said, to 240 days max or to 45 days or even sooner if the SEC wants to. Now, we also do have a new chairman of the SEC who is incredibly pro-crypto as well. Now, moving on essentially from the ETF applicants to Tether. Before we talk about Tether, and it's their new AI venture they're going into, let's go inside the comment section first. As I said previously, this is essentially live, which means if you do have any questions or comments you need to make or statement to make, put it down inside the comment section. I read everybody's questions and statements and so on one by one. I don't miss out on anybody because I know everybody, some people might have some certain questions they want answers to, and I'm here to answer those questions for you as much as I can. And so let's go inside the comment section first before we do talk about the next news, which is regarding Tether's AI. We have a lot of news to cover on tonight's live, so stay tuned if you're watching right now. Max says, click on Miles' name at the top and hit the thumbs up. For those that don't know how to find the like, facts. Let's go. Click on Miles' name at the top and hit the thumbs up. If you're watching on YouTube, drop a like. If you're watching on X, drop a like as well and retweet. Richard says, hello, Miles. Glad you are back and feeling better. Richard, let's go. Good to see you. How you doing? Hi, Miles. Welcome back. Glad you are better. You were missed. Let's go, Artistic. Thank you so much for the kind words as well. Good to see you as well. How you been? Yes, I'm very happy to be back. I'm, very excited to be back. Missed every single one of you. Missed doing the live shows. And honestly, it's great to have my legs back also as well. This infection that I had for the past week, not being able to walk properly or even lay down or stand up, and it was quite difficult, but since that I'm able to walk, sit down, lay down again once again, which is absolutely amazing. And it's great to be back to do the live shows again, once again, Monday to Friday. Happy Pisces says, so glad you stated that, Miles. New bull run, new focus. People disagreed with me months ago, and they think meme coins will go parabolic too. Maybe one thing, yeah, I'll say some will go. But good, yeah, facts. Hi, Miles and CMF. George, good to see you. How you doing? How you been? Orphan says, hi, Miles. Nice to see you back. Good to see you. How you doing? How you been? Carl says, hi, Miles and CMF family. It has been a long time since my last time. I was very busy, but I'm back. Let's go for the facts news. It's time to turn on my CMF TV. Let's go, Carl. Peg says, so glad to see you feeling better, Miles. It's ball season, baby. Let's go, Peg. Happy Pisces says, with regulations and banks coming, it's the new game. Facts. That's all everybody's focused on. What's happening right now is regulations, banks. It's the financial side of crypto is about to have that spark it never had. And one particular crypto project is about to have that spark it never had, which was XRP, because it was held back for the longest time. Michael says, so much for 5,000 years, or even 5,000 years for essentially China to be able to get to, US levels. Hi, Mouse. Nice to see you back, Peter. Good to see you. How you doing? How you been? Ray says, greetings, Miles of CMF. Great to be back. Let's go, Ray. Facts. Curtis says, I know this group is strong, Bitcoin and XRP, but my biggest mover has been AMP, Got to Love Finance. Let's go, Curtis. AMP, good project in a sense as well. JP says maybe XRP will get their ETF approved for my birthday gift. Hopefully, I mean, regarding the case, it's happening. Regarding the case, regarding the Ripple case and the XRP case and with the SEC, that's pretty much come to an end. We do have that final with the judge in removing that injunction, so that XRP is able to, essentially Ripple is able to sell, essentially XRP to institutions and not because there's some sort of a weird security. But technically that's done. But in that case, is essentially the injunction is removed and it's on paper. It's going to be excellent news for the crypto space. Next, it should just be straight away XRP ETFs, because the SEC will have a understanding of what essentially Ripple does and what XRP is, what XRP Ledger is, due to this long battle case. So they shouldn't have any sort of issues with approving XRP ETFs, because the SEC had the longest look through out of any crypto project inside of the XRP Ledger. So they shouldn't really, after essentially the injunction being removed, the case is on paper, it's done deal with the SEC and Ripple. The SEC shouldn't really essentially postpone after the case is, injunction removed, the case is done. The SEC shouldn't essentially postpone XRP ETFs, because the only crypto project the SEC has had the biggest look through is XRP Ledger for the longest time. So, they shouldn't be going back and forward and postpone XRP ETFs straight after the whole case is done with, in my point of view, because what do they need to look into further? That's the longest case they've had inside the crypto space. They know the ins and outs of the XRP Ledger and Ripple. Hi, Miles. Nice to see you back, Peter. Let's go. We were here. 25, you said 24. Did you lose a year while you were away? Long. Let's go, Shelly. Which ETF do you advise to get? Which ETF do I advise to get? First of all, I will never advise anybody to buy anything inside a crypto space or inside of any sort of market space. Second, Carl, I wouldn't really consider an ETF. ETFs are established for essentially people who don't understand the crypto space, who just want an easy route of being a part of the crypto space. If you understand the crypto space, you know how to do transactions, you know how to safeguard your own wallet, you know how to essentially send money to another or essentially purchase using cryptocurrency, so on. If you know everything about the crypto side, then ETFs aren't really the essentially where you should be heading towards. But if you're essentially basing a question of which ETF do I think is going to do better than the rest of the ETFs, some people might think my answer is a bit biased, but I do believe, based on some factors and that have been in play, that XRP ETFs will do better than the rest of the ETFs that are being approved or going to be approved alongside the XRP ETF. I'm not basing my answer on because I'm biased. I'm basing my answer on who has the most amount of ETF applications. You see, when somebody like Franklin Templeton, for example, I'll take one out of the mix of the XRP ETFs. When somebody like Franklin Templeton applies for an XRP ETF, it's because their client base wants an XRP ETF. If the majority of their client base wants a certain ETF, then Franklin Templeton will look at that as a money-making opportunity, because they're going to make money on the fees, which means then they'll go essentially file out for that one particular essentially ETF or many ETFs their client base essentially wants. So there has to be a multitude of clients that are rallying for an XRP ETF through Franklin Templeton for them to file it out. If there's about 10 people who want an XRP ETF through Franklin Templeton, then Franklin Templeton is not going to be going through all that headache of a paperwork and paying a fee to get an XRP ETF. So that means there's a multitude of their client base essentially that wants an XRP ETF. So out of all the ETF applicants that have been essentially filed in, the XRP ETFs have the most amount of essentially filings, which essentially is a major point to consider. That means out of all those companies, their client base essentially Sorry about that. Their client base wants an XRP ETF. So that's one thing to consider. Who has the most amount of ETF applications? It shows that their client bases want an XRP ETF compared to the rest of the ETFs. Two, you've also got to consider the fact that essentially there was a study test done regarding regarding ETPs of crypto projects that don't have ETFs yet. And the most amount of money that was brought in from an ETP for the crypto projects was actually XRP, excluding Ethereum, essentially, and Bitcoin ETPs, because they have ETFs. The rest of the crypto space doesn't have an ETF. So regarding the rest of the crypto space that has ETPs, XRP actually brought in the most amount of volume. So not only does XRP, there's more XRP ETF filings, which is actually you got to consider their client bases want an XRP ETF. But two, it actually brought the most amount of money for an XRP for an ETP. So they're considering that if it goes for an ETF, it's going to go absolutely ballistic. So it's not because I'm biased towards XRP, but those are major things to consider. Now, if that's what your question essentially was on, which one do I think is going to be the best one out there in terms of ETFs? Pierce says, Evening Miles, glad to see you're back and healthy again. Let's go, Pierce. Good to see you. So how you doing? Evening Miles, so glad you're feeling good enough to do your amazing show. Let's go, Joe. How you been? Miles, if Japan's banks are going to be using XRP, does that mean they can exchange with US banks? Well, if those banks essentially are using the XRP ledger, then yes. If they're also using RippleNet, then also yes, because Ripple does utilize the XRP ledger themselves as well. So yes, if those banks are on the essential RippleNet or essentially working with Ripple, yes, domestic or internationally. We said the same thing again. Sorry, didn't mean to echo you. Problem of Pisces. Chris, hi Miles. What's your opinion on HBAR? Chris, how you doing? What's my opinion on HBAR? Incredible project. Has a very bright future ahead of itself as well, in my opinion. It's definitely a project to look into if you already haven't. Has a very bright future ahead of itself. JP, for their birthday, Ripple, it was launched in June. Let's go. Carl, how or where can we get this XRP ETF? If you want an XRP ETF, if you really want to go for an XRP ETF, you can do essentially. If you want to go for an ETF in general, you can do it essentially through the platforms that they do offer through essentially Franklin Templeton once they do approve their XRP ETFs and so on. But the companies that filed it for an XRP ETF is where you should be going towards to get your XRP ETFs from once they're approved. So the 10 filings essentially, I'll list them. If you want, I can send you the list of the companies that have filed it for an XRP ETF and you can go and check them out. We said the same thing, but for me personally, if somebody said, do you want to buy an XRP token or do you want to buy an XRP ETF? I'm always going to say XRP token. I'm always going to say the XRP coin itself rather than XRP ETF. But if you want to go for an ETF, you can do it. It is your money at the end of the day. Thanks for your answer. No problem, Carl. I asked this question for explaining for beginners. Many persons don't know one ETF. Good question. Then Shelly, Shelly says, will BlackRock file once everything with the SEC is completed, or at what point? Will BlackRock essentially file in for an XRP ETF once the SEC situation is done with? They should do, to be fairly honest. BlackRock should file after the whole case is done, the injunction is removed, and so on with Ripple and SEC. BlackRock should file in for an XRP ETF. There's no, I'm thinking to myself that if there are 10 XRP ETF filings and there are big major players like Franklin Templeton, then there should be a client base in BlackRock that also want this token as well. But I think I've always said it's due to essentially BlackRock isn't going to file in for something that is in an ongoing legal battle, for example. But let's see, they should do. If they're essentially rivals to it, they will follow in suit, is what I would say. If they don't, then they're probably holding some sort of a grudge against Ripple. Now, but they should do. Tether is what we're going to talk about next. Tether unveils decentralized AI platform, QVAC, for essentially local device users. So Tether has decided to, being inside the stablecoin space and creating essentially a gold backing or a gold essentially token, to now entering and moving on from data to now entering into AI. So Tether wants to fill a gap inside the market space for decentralized AI is what they're aiming for. So this is what they're essentially aiming for. Tether, the major stablecoin issuer, has just unveiled QVAC to decentralize AI, reducing reliance on essentially centralized servers. So OpenAI, for example, ChatGPT, or any other essentially AI model out there like Copilot and Gemini and so on, they seem centralized, and sometimes their answers are a bit biased. I've had situations where I've asked ChatGPT or Gemini or Copilot certain questions, and their answers were quite biased towards some political parties. So Tether has come out with a solution to that by creating servers, essentially, where people are the servers instead of centralized servers. Now, so the CEO mentioned that the platform will leverage Bitcoin and USDT for payments regarding their new AI server model. The QVAC's introduction is set to impact cryptocurrency markets by increasing the utility of Bitcoin and USDT, because that's what's going to be used as payments for this. Early applications include QVAC Translate and QVAC Health. They're both AI models, which prioritize privacy and decentralization when it comes to AI. Financially, Tether's initiative suggests a notable, essentially, capital allocation despite market trends, highlighting a commitment to integrating AI technology. No regulatory reactions have been reported so far, and the project's open source SDK offers opportunities for developers to create diverse applications, potentially leading to new, essentially diverse applications, and potentially leading to new privacy-focused innovations as well. Now, this aligns essentially with the growing interest in secure, user-centric technologies. Now, declarations from essentially industry figures like Paolo, the CEO essentially of Tether, the platforms aim to support local AI capabilities as similar past events have shown the convergence of AI and crypto that can create some significant market engagements. So Tether is thinking about entering the AI space. The two sections they're starting with is health and translate. So translation and essentially health is what Tether is aiming for first. The two categories, they're going to expand on their AI categories, but they're trying to create a decentralized AI platform that doesn't have centralized servers or centralized opinion. It's a great concept, to be fairly honest. It's the one bright thing Tether's done so far. Now, blockchain association is what we're going to be talking about next. So here it is. Blockchain association, who has helped the crypto space, essentially expand in the United States. The blockchain association has had talks, with the SEC regarding roundtables. They've even had essentially parliamentary members, discussions on regulations for the crypto space, how for stable coins and how to expand inside of America, for America to become that capital hub of cryptocurrencies. So why am I telling you all of this? Because blockchain association has essentially chosen a new leader for their department, and the new leader that essentially the new leader that has been chosen is a CFTC member. So Blockchain Association chooses CFTC Summer Mersinger to lead high-stakes crypto lobbying. Washington's crypto playbook flipped on essentially May 14th when Commodities Futures Trading Commission, CFTC Commissioner Summer Mersinger agreed to helm the Blockchain Association, leaving the regulator for an industry most influential trade group. So a big player inside the CFTC Commissioner section has decided to join the blockchain space, and she can use her lobbying powers in favor of cryptocurrencies and to bring those regulations in. This is quite a bit of a positive news for the entire crypto space inside the United States, to be fairly honest. According to the post that's been published, the Blockchain Association, Mersinger will leave her position at the federal regulator on May 30th and formally join the crypto trade group on June 2nd. The Blockchain Association has cited Mersinger's experience with the regulatory challenges facing the digital asset ecosystem and her advocacy for a crypto framework that balances essentially consumer protection with technological innovation as a reason for her selection. We are closer than ever to passing a fit-for-purpose legislation that treats the digital asset industry as a technological marvel it is, supporting innovation in the sector while providing essentially important consumer protections. The Blockchain Association said essentially, Summer joins as a vital juncture as we make the final push to ensure we take positive momentum to lasting law. Essentially, in terms of the organization continued, Mersinger replaces a longtime Blockchain Association CEO, Christian Smith, as the latter continues her career as the president of Solano Policy essentially institution. The beginning of essentially May 19th, Smith praised Mersinger essentially on a post today, saying that the Blockchain Association is in excellent hands with the new regulator. As this pivotal moment for crypto in Washington, Summer is the perfect ladder, Smith said, and with 20 years plus experience of across both chambers of Congress and the CFTC, she's going to be playing a very vital role in the Blockchain Association, who helps essentially the crypto space to bring those regulations in for the entire crypto space for America. Now, Mersinger began her tenure at the SEC in March 2022 under essentially the US President Joe Biden, where she pushed for common sense crypto regulations. Before her service at the agency, Mersinger also worked under Senate Majority Leader John Tinch for nearly 2 decades. Also, it has been a privilege to work and serve at the CFTC in both the first and the current Trump administration as well. She's been inside the CFTC for the longest time. She's been inside of CFTC when Trump was first president of the United States, and then Joe Biden, and then Trump again. She's been inside the CFTC. She has that experience. She has that lobbying power to bring to the table for the Blockchain Association to push those crypto regulations in for the United States. The faster we get regulations for the crypto space, the faster the crypto market space is going to be moving on towards utility projects, and decoupling is going to be happening. Now, moving on essentially from the CFTC and the Blockchain Association announcements to Democrats. Now, Democrats have been the downfall of an embarrassment for the American citizens and for the entire world, to be very honest. For the longest time, people thought the Republicans were the embarrassment of the United States, or Trump was the embarrassment for the United States. But it always turned out to be the Democratic Party and Joe Biden and everybody else they do appoint for themselves to lead them. The Democratic Party, for the longest time, has been stealing taxpayers' money from the United States and putting it in their own pockets, or creating random contracts through USAID. And essentially, the contracts they essentially put into play was, for example, $20 million for a cartoon to be made in the Middle East, $1 million to see how ice cream can cool itself, $2-3 million to essentially put hamsters on treadmills, $10 million for essentially a transvestite project in Guatemala. So the randomness and the amount of money essentially Democrats have wasted over the years and put in their own pockets. And people like Nancy Pelosi, her portfolio doesn't add up to her wages. Or people like Senator Elizabeth Warren, her portfolio doesn't add up to her wages. People like this are playing the moral card once again. So this is why I'm bringing this up, because Democrats demand, while Trump is inside the Middle East, while Trump is in the Middle East making contracts, making things happen for the United States, the Democratic parties, while Trump is in the Middle East making contracts, have come out and demanded a Treasury report on Trump's crypto holdings. So top House Democrats are pressing the Treasury Department to release all suspicious activity reports related to Donald Trump's crypto ventures. Elon Musk America PAC and the GOAT essentially fundraising platform WinRed and several alleged scam PACs. The letter, signed essentially by reps like Gerald, Joe, Jamie, cities essentially possible campaign finance violations, foreign influence, securities fraud, and deceptive essentially fundraising targeting vulnerable Americans. This is what Democrats are filing against Trump. Have you ever heard of that old saying? When you tell your own children, for example, if you point your finger essentially at someone and say bad things to them, there's about, essentially 3 more fingers pointing towards yourself. The reason why I bring up this very simple, essentially, analogy is because Democrats, for the longest time, have milked the US dry. They've stolen as much as they could. They ruined the American economy. They flooded the American economy with immigration. They sent so much millions to billions of dollars abroad, When America was having its own flood situations, Americans received $175 as a loan to pay back per family, by the way, when people lost their homes in the flood. But people abroad were getting millions to billions of dollars. The Democratic Party is potentially the worst party I have ever seen, not just in America's history, but the world's. They've stolen, milked America dry, stolen from American citizens, filled their own pockets, and they have the cheek or the stand on the moral side of Trump is abusing the American people and stealing money from them to essentially fund his crypto campaigns. The lawmakers are particularly essentially focused on Trump's crypto companies, World Liberty Financial, which launched in essentially late 2024. World Liberty Financial's non-transferable tokens, critics say, offer no real value, have drawn scrutiny for receiving $75 million in funding from Justin Sun, a Chinese-born entrepreneur facing SEC charges at the time. Shortly after Sun's investments, the SEC paused its case. The World Liberty Financial has since announced the USD-1 stablecoin tied to $2 billion deal, essentially involving the UAE-backed fund and Binance. The investigation also targets the Trump token meme coin, launched just before Trump's inauguration. Entities linked to Trump reportedly hold 80% of the token supply and earned $100 million in trading fees. With no public records of the coin's buyers and the SEC ruling meme coins fall outside the SEC's jurisdiction, Democrats warn of the risk of undisclosed foreign actors influencing Trump through crypto. Foreign actors are influencing Trump through crypto. The Democrats are saying this. Again, this is some, the Democratic Party, Nancy Pelosi, extraordinary, very big, large portfolio. The wages don't add up to a portfolio. Nancy Pelosi does better on the stock market than the top percentile of Wall Street does. But somehow the Democratic Party are the angels in this scenario. They never stole money from the public. They never cheated their way. They never used inside information. Musk also America PAC is also under scrutiny for allegedly leveraging financial backing to gain Trump's political favor, including turning the White House South Lawn into a Tesla showroom. So the Democratic Party is angry at Elon Musk for displaying a few Tesla essentially vehicles on the White House, and essentially Trump sitting inside of a Tesla. They're still angry about that, Democrats. Why aren't Democrats essentially, Meanwhile, the wine essentially red. I was about to say something, but I'm not going to. Meanwhile, the win essentially red and 2 scam packs are being investigated for essentially deceptive practices, including essentially tricking elderly donors and using Trump's voice in robocalls to raise funds. The lawmakers say that this probe will help determine if new legislation is needed to prevent fraud and preserve election integrity. So, Democratic Party is not happy with Trump, with all the winning he's doing, and they've decided to go after him. It seems like the Democratic Party is never going to learn. There's a reason why the Democratic Party lost by a landslide, and they're going to continue. The Liberal Party and the Democratic Party are going to continue losing by a landslide because they just can't get it through their thick skulls that they're going after things that nobody could really care less about. And what they should have done, and what they could do still now, is maybe help make America safe, just like Trump is doing with the immigration situation, deporting people. But the Democratic Party want to bring those people back inside the United States. So this is why the Democratic Party lost by a landslide, because it just seems like they're allergic to listening to the retail section. And all they care about is taking down Trump. But they couldn't care less about keeping America safe, or closing its borders, or stopping the inflation. Or maybe, telling the people the truth, where essentially Joe Biden has dementia. But all they care about is taking down Trump. Even though Trump has fixed inflation, done more trades for America, Boeing Airlines has just got its biggest contract in its company history because of Trump. There are more manufacturing jobs coming back to the US. America is safer than ever than it was essentially under Joe Biden. Immigration is at its all-time lowest. Egg prices down, fuel prices down. America's doing actually quite better as time goes by, and as medication prices are coming down as well. None of these things matter to the Democratic Party. All they care about is taking Trump down. This is why the Democratic Party lost by a landslide, and this is why the Democratic Party is going to continue losing by a landslide. Now, JP Morgan is what we're going to talk about next. So, JP Morgan built its own blockchain, essentially network backed by Chainlink. It seems like JP Morgan has decided to move away from Ethereum to not completely move away from Ethereum, but in terms of tokenization and so on, to move away from Ethereum to a much more public chain, which is something that a lot of people said banks will never do that. Banks will never use public chains, and banks will always use private chains. And the example was made when JP Morgan created their own, essentially, private chain off the books. Essentially, nobody was allowed to buy it from retail section. It was only used for institutional purposes. And everybody said, see, JP Morgan is using a private chain. That's what we said is going to happen. It's only going to be private chains for banks, and banks will never use public chains, and so on and so on. Turns out banks are also going to be using public chains as well. And everybody that said banks will only use private chains was wrong. In a bold, essentially, departure from Ethereum-based public chains and favored by most, essentially, by major financial institutions, JP Morgan is now constructing its own, essentially, chain on Chainlink, on Chainlink's network, with key support from, essentially, Chainlink and Ondo Finance. The interesting part, essentially, is that JP Morgan is moving away from Ethereum. While other banks, essentially trillion-dollar asset managers and even Chinese state-owned, essentially, banks experiment with Ethereum's decentralized infrastructure, JP Morgan is taking a different route, one that prioritizes privacy, control, and institutional exclusivity. Earlier this week, JP Morgan's essentially blockchain decision, key news, made headlines after essentially executing its first transaction on a public ledger, using essentially Ondo Finance platform to tokenize a bond. This marks a major transition following months of private testing of JP Morgan's closed blockchain. What made this transaction possible was Chainlink's interoperability protocol, which allows secure off-chain data transfer between essentially JP Morgan internal systems and Ondo's essentially public blockchain. This significant demonstration of Chainlink's institutional utility and may reshape the narrative around enterprise blockchain adoption. Chainlink's co-founder, essentially Sergio, said, "This is the beginning of something much bigger." His optimism hints at a wave of real-world tokenization use cases coming to life by a trusted middle essentially like Chainlink. JP Morgan's earlier hesitation towards crypto came down to regulatory essentially ambitions. Now, under essentially the Biden administration, companies feared heavy fines due to unclear rules. The potential risk essentially of billion-dollar penalties forced many firms to essentially delay or abandon their crypto essentially ambitions under Joe Biden and obviously under Gary Gensler. However, a shifting political landscape under essentially Donald Trump has returned that pro-crypto innovation essentially sentiment back towards the market space. The crackdown essentially on crypto-aligned enterprises has seemingly eased, paving the way for institutions to re-enter the crypto space. Firms like Morgan Stanley are now also eyeing crypto essentially services for their client bases. Fidelity is building a stablecoin, and BlackRock is seeking to launch a staked Ethereum ETF. Even essentially Charles Schwab has announced plans to integrate crypto services this year as well. As they essentially, though, observers, this institutional shift may usher in a new crypto-powered interbank payment layer, setting the foundation for a global on-chain finance infrastructure. This is why I keep on saying that, essentially the next run we're going to be having, the run that we're going to be going towards right now, is a very, very regulated institutional crypto, essentially utility run. Not your typical runs. It's not just me who's been saying this. It's also Grayscale's CEO, Franklin Templeton, said this. Standard Chartered Bank said this. Their analysts have said this. JP Morgan's analyst, Nicholas, has also said the same thing as well. Now, Ethereum Foundation is what we're going to talk about next. And it's ironic because the same time JP Morgan has announced that they're going to essentially move away off Ethereum to Chainlink and essentially Ondo Finance, Ethereum Foundation has also decided to launch a few things as well to make their own network look like, people should be going towards their network, not moving off it, is what JP Morgan is doing. The Ethereum Foundation launched the $1 trillion security initiative today. And they're aiming to scale its security infrastructure for global usage and $1 trillion network. This initiative reflects Ethereum's board, essentially, ambitions and may impact the financial landscape as crypto security advances and concedes with mainstream adoption, which is what's happening inside the crypto space slowly. The Ethereum Foundation has initiated a comprehensive security upgrade known as essentially the $1 trillion security initiative, focusing on strengthening the infrastructure for supporting a global scale financial system. Led essentially by Frederick and Josh, the initiative enlists a notable security experts to implement a robust strategy. Mihdi and Zach contribute to these initiatives as well in terms of leadership. The initiative is poised to enhance the security of the entire Ethereum network, leading to increased confidence among stakeholders that are holding Ethereum. This has the potential implications for market stability and security reassurance across the ecosystem. The financial implications of securing trillions in value are substantial as Ethereum acts to develop safer protocols. Investments in related assets like Ethereum might experience positive sentiments. Frederick, essentially EF protocol security lead, Ethereum Foundation, said beginning the most secure platform in the crypto ecosystem isn't enough. Ethereum's ambition is far greater to be a civilization scale infrastructure that securely essentially underpins the internet and global economy, surpassing essentially the safety and trustworthiness of the world's legacy systems. Past security efforts by Ethereum Foundation have not matched the scale of the current initiatives. This marks a significant evolution in Ethereum's security strategy compared to early enhancements. Based on historical security upgrades, the new initiative could lead to a heightened network essential resilience. Experts' opinions suggest that favorable outlooks for adapting to the growing financial demands. Ethereum really wants to be inside the financial category, regarding banks and institutions, but it seems like not only does Ethereum have ridiculously high gas fees, but they're also having not much of, they aren't the best when it comes to security as an entire blockchain, it turns out to be. Turns out that other crypto projects are better in terms of security, but Ethereum has just launched this new $1 trillion plan to prop up their essentially security, because they're aiming for a global stage financial market space. Could be one of the reasons why JP Morgan decided to move off it in terms of tokenization. Now, and also just to point out, if you want to be inside a financial category, I said this a long time ago when JP Morgan first announced Ethereum as their backbone for essentially their Onyx crypto project, which is not for the retail section, only for the institutional section, and is private. I said this a long time ago when essentially they launched their Onyx chain on Ethereum. A lot of people said to me, essentially, why are they launching on Ethereum? If XRP Ledger is better, or if this is better, or that is better. And I said they're making a big mistake, and I realized it later on. And fast forward to today, when essentially the JP Morgan has announced they're going towards Chainlink and Ondo Finance now. Give it a little bit more time, we're going to hear the news that they're actually going to be moving on to the XRP Ledger. Look, if you are a company, it's not that difficult. If you're a company or essentially a bank, the number one chain, if you want to be inside a financial category, the number one chain is XRP. Okay, it's the XRP Ledger. If it's gaming, then XRP is not for you. If you're a company or a bank, if it's gaming, XRP is not for you. If it's AI, it's not for you. If it's essentially Web3, data storage, so on, it could be for you. But if you're inside the financial sector, you don't need to look further. It's the XRP Ledger. It's the most secure. It's just a better option for banks that you should be using. I don't understand this loophole that some of these banks and institutions do. They could just go towards the XRP Ledger. And some might not do that due to essentially the ongoing legal battles with the SEC, but also some might have funded that legal battle with the SEC. But, that's not here or there. And also Ripple being a private company as well doesn't really help, but it's just that Ripple doesn't want to be controlled by, BlackRock or Franklin Templeton or Goldman Sachs or so on and so on if they do go public, because those companies will buy the majority of the share, which will then essentially they'll have the biggest voice inside of Ripple. The longer Ripple stays a private company, the more control Ripple has over its own actions and movements inside the market space. And some companies might not like that Ripple is not coming out to play nice, but instead coming out to take over the market space, is what it looks like from Ripple when they're not going public. Because companies like BlackRock and essentially JP Morgan and Goldman Sachs and so on, they want to, go help companies like Ripple to go public, but Ripple doesn't want to go public because they'll lose that control they have over their company, because once it goes public, whoever buys the majority shares pretty much has the biggest voice in the company. And so that means that when a company as big as Ripple doesn't want to go public, it means that they are not here to play nice. They're actually here to take over, is what the indication is giving, which I completely understand. I genuinely do understand that. So that's why some companies might look at that. But anyways, JP Morgan is doing loop arounds. Essentially Ethereum they started out with. Now they're going to essentially Chainlink and on the finance. Just get it over with and get it to XRP Ledger, okay? Because we know that your loop around is going to end up there anyways. Now, Kazakhstan is what we're going to talk about next. Now, it is a country that we rarely talk about on this live, or never talk about on this live. I think we've talked about it once or twice on this live, to be fairly honest. But here it is. Kazakhstan aims for Central Asia crypto hub leader status. Now, you might be thinking to yourself, what relevance does this have to somebody that's living in the West? For example, if you're living in, the US or Canada or the EU, for example. Now, the relevance of this would be that countries are aiming to become capital hubs. The more countries that aim for becoming capital hubs, the better it is for the market space. More liquidity enters the market space from every angle, is how you have to look at it. Also, countries like Kazakhstan are realizing that if they want to get new investment into the country, crypto is the way to do it. Because they looked at the UAE's playbook. When the UAE decided to go and become the capital of cryptocurrencies, they got a tremendous amount of money coming into their country, tremendous amount of contracts were made, investments were made, tourism was actually skyrocketed on a whole other level because more buildings were being built. A lot of things happened regarding that matter. So Kazakhstan realized to themselves that they need to be a lot more of an open country, but also that their key play is going to be essentially enter the crypto space, to build those contracts and relationships internationally. So Kazakhstan could transform into Central Asia's dominant cryptocurrency hub if proposed regulatory reforms are implemented. According to essentially their country's first vice minister of digital development, innovation and aerospace industries, in a recent essentially published newspaper article from Kazakhstan, essentially articles, outlined how lifting current restrictions on digital asset tradings nationwide could pose essentially position Kazakhstan as a regional blockchain leader, competing with neighboring Uzbekistan and Kazakhstani essentially neighbors. Now, Cointelegraph reports that broader legalization and taxation could generate hundreds of billions of essentially intention for the essentially nation's budget. The minister's proposal comes aimed growing cryptocurrency activity in Kazakhstan, which has already essentially established itself as a significant player essentially in the global crypto mining landscape. Now, statistics show that Kazakhstan's crypto mining sector has contributed $34.6 million in taxes over the past 3 years, with 415,000 mining machines registered and 84 licenses issued since 2023, according to data from the Digital Ministry. Now, the central to Kazakhstan's crypto strategy is the Astana International Financial Center, the AIFC, a special economic zone with its own independent legal and regulatory framework. Established in 2018, the AIFC has become a crucial hub for cryptocurrency activities in the country, with trading volumes on AIFC exchanges surging from $324 million back in 2023 to $1.4 billion they've brought to the table for the crypto space in 2024. That's 2025 data hasn't been out yet, but they've brought $1.4 billion to the crypto space table. Currently, Regulated crypto trading is restricted to the AIFC. Starting essentially in 2025, miners will be required to sell 75% of their mined assets through the AIFC platform, up from the current 50% requirement, according to a report from the International Monetary Fund, the IMF. Despite these regulatory essentially challenges and channels, experts estimate that the total digital asset transaction volume in Kazakhstan reached approximately $4.1 billion in 2023, with 91.5% occurring outside regulated environments, this gray area market space that was created. Also, to put in perspective, Kazakhstan isn't also trying to aim for becoming a capital crypto hub, which is amazing to see. If more countries realize that the more crypto friendly they become, the better it is for their economy, because blockchain companies will come there and throw money around, do some investments, build some new buildings, and so on and so on. It's just better for their country to build that international relationship. If they want to have that international relationship, crypto is the next venture to jump into, as Kazakhstan has seen and other neighboring countries are seeing it right now, that crypto is the next wave and they need to jump on that bandwagon. And that adds a lot of money to the table for all of us that are holding cryptocurrencies. Well, if you're holding the correct cryptocurrencies. But now, Kazakhstan is also leading in CBDCs as well. So in a parallel with its crypto industry development, Kazakhstan is advancing its central bank digital currency CBDC, the digital tenge. The project, which officially launched back in November 2023, is expected to be fully implemented by 2025. Also, the EU is coming up with a CBDC this year as well. Brazil's coming out with a CBDC this year as well. India is going to be expanding the CBDC. A lot of countries are coming out with this year, and small portions of CBDCs. The CBDC has been integrated with major payment networks, including essentially Visa and MasterCard, allowing for seamless transactions globally. According to R3, development of digital tenge began in essentially February 2023 with the National Payment Corporation, NPC, now the leading implementation efforts. The CBDC programmable nature allows for innovative applications, including smart contracts and transparent tracking of essentially public expenditures. Now, also in July 2024, Kazakhstan demonstrated CBDC functionalities by using programmable digital tenge to pay for a rail line construction project to China, showcasing its practical applications for infrastructure developments and cross-border trade. There is something that nobody knew about. Kazakhstan paid in CBDC money to China for essentially a rail line to be happening construction project. CBDC is being used, things that people didn't know about. Now, but honestly, it's the concept of Kazakhstan going into becoming capital cryptocurrencies is great to see, because other countries like Kazakhstan will see it as they need to become crypto friendly. The more countries realize they need to become crypto friendly, the better it is, the more money that gets added to the table. And they do bring a lot of money to the table. These essentially Middle Eastern countries, or Asian countries, they do bring a tremendous amount of money to the table when they're not regulated. They're bringing $4.1 billion to the table so far, estimated. On paper, roughly the numbers were between $1.4 to $4.1 billion. Now, Van Eck is what we're going to talk about next. So Van Eck, a while ago, launched an idea. Instead of creating an ETF for a particular crypto project, they decided to create an ETF that essentially puts a multitude of crypto companies inside of the ETF. So not only do institutions get to buy a Bitcoin ETF or an Ethereum ETF or the other ETFs that are coming out, but Wall Street or investors and so on get to buy into crypto companies with an ETF. This just brings more confidence to the table for the crypto space, to be fairly honest. And they essentially announced this a while ago, which essentially I revealed on this live. But the thing is, we're actually getting close to that deadline of launching. So here it is. Van Eck introduced the on-chain economy ETF on essentially May 14, 2024, providing a managed exposure to companies shaping the blockchain ecosystem in the United States. This ETF launch widens the market access to blockchain sector investments with expected impacts on digital asset exchanges and fintech companies. Van Eck has launched his on-chain economy ETF node to offer exposure to blockchain-related equities. The ETF is actively managed and focused on essentially on companies involved in digital asset infrastructure. The launch follows the SEC's approval and is led by Matthew, who aims to connect investors with the blockchain ecosystem. He said, "Excited to announce we've received regulatory effectiveness for Van Eyck on-chain economy ETF Node." Is the ticker. Launching essentially today, Node aims to provide managed exposure to companies shaping the blockchain and digital asset ecosystem inside the United States. The ETF essentially introduction could drive demand for stocks in mining, fintech companies, and energy essentially companies as well. While investors don't directly hold cryptocurrencies, the market may see increased activity in blockchain-linked equities because it shows confidence towards the blockchain companies. So not only are they showing confidence towards crypto, essentially projects in terms of their crypto ETFs, their tokens, but this also shows confidence towards crypto companies as well in the financial essentially space, which is great to see. Confidence in crypto tokens, confidence in crypto companies. This is amazing to see. The ETF introduction could drive demand for essentially these types of essentially equities. Financially, Node may align with investors looking for indirect exposure to digital assets within regulatory frameworks. Enhanced liquidity in blockchain sectors is anticipated without essentially altering native token values. Van Eyck's earlier digital transformation ETF aimed essentially at passive investments, parallel this active approach that they have. Previous ETF launches have boosted liquidity and interest in blockchain equities. Such ETFs historically improved market access for mainstream investors based on essentially past trends, and Node could attract essentially institutional flows into equity markets with blockchain exposure, fostering sector growth. What we're going to be talking about next, now moving on essentially from Van Eyck, but this is amazing to see from Van Eyck, honestly, bringing that confidence not just to crypto tokens, but also bringing that confidence to crypto companies. It's amazing to see. Now, before we talk about the next news, let's go inside the comment section first, and then we go straight into the next news. As I said previously, this is live, which means if you do have a question or any statements to make or comments to make, put it outside the comment section. I read everybody's comments one by one. But before we go for the next news, let's go inside the comment section first. Now, let's see where we were at. We were at here. Ripple says, "Hi, Miles and family. Good to see you, Ripple. How you doing?" Ripple also says, "Do you know Coinbase will be on the S&P 500 Monday?" Yes, I'm aware of that regarding Coinbase being on S&P 500. It's also one of the first companies to be on the S&P 500 as an actual blockchain company, but so is soon Galaxy Digital. Yes. Do you have a name for decentralized AI to check on? For Tether's project? Yes, it's called QVAC. For Tether's project. If you want, direct message me, Carl. I'll send you to Tether's website for their new AI project if you want to check it out. Lena says, "Greetings, Miles. Good to see you again. Good to see you, Lena. How you doing? All facts. Let's go, Ray, regarding the politicians. So happy you're okay. God bless. Let's go, Golden Dragon. How you doing? A very rich country is Kazakhstan. Yes, they are a very rich country. Although it is working with Ripple, that's also true. Yes, facts. Good morning, Miles and family. Ghostman, good to see you. How you doing? How you been? Glad to see you back, Miles. Let's go, Ghostman. How you doing? Hey, Miles, the CMF. Stormy, good to see you. How you doing? How you been, Stormy? Now, one thing I've always said to people for the past 2.5 years is that you shouldn't go around and show off your crypto balance at all. So there are certain people essentially on social media who have some sort of an ego, and they have to post a snapshot of their Trust wallet or Ledger or Xamon wallet, and they, essentially, because of their ego, they post these essentially videos or pictures of their crypto millions online. And that could end very bad for a lot of people. I've said this for the past 2.5 years. The same way you don't go around and show your bank balance on your phone to people around you or online, the same way you shouldn't go around essentially showing off your essentially Trust wallet balance or your Xamon wallet balance or your Ledger wallet balance or your Tangent wallet balance and so on, because it can end very bad for a lot of you. And it's just better to, put that ego back inside the box and, enjoy your millions to yourself, but you don't have to go around and screaming out to the whole world. Now, reason why I bring this up, and to be fair, some of these people that I'm about to read out now, they didn't show off. But just to give you an example of what could happen if you do show off. So France is having a bit of a major situation going on, where it's actually reached to a level where the French minister has summoned crypto CEOs within France to come in for a discussion. So crypto CEOs who live in France, now this is also Ledger, for example, they're French, crypto CEOs who live in France have been summoned by the French minister to come and have a discussion. Because people are getting, well, here it is. So France's interior minister has invited crypto leaders to discuss their security after several attempted and carried out kidnappings of people linked to the industry this year. The meetings follow the latest such incident that happened when essentially armed attackers tried to abduct a person related to a crypto company. French Interior Minister, essentially Bruno, will meet with cryptocurrency professionals later this week to talk about how to prevent future kidnappings after a string of attacks against relatives of persons dealing with crypto assets in France. Apparently, a lot of people that are related to crypto companies or essentially are crypto people and have been showing off too much, who live in France, have been showing off their crypto wallets here and there, are getting kidnapped. So this is a very serious situation where essentially when the France minister has to step in and invite all of these crypto CEOs and essentially these crypto people, higher up people, to have discussions regarding their security levels, because it's quite a major situation if this is happening. So he announces decisions to meet industry leaders a day after the brutal attempt to snatch a woman and her essentially son from a street in Paris. This is in daylight, by the way. The hit, essentially capital city's 11th district, carried out by 4 masked men on broad daylight, was caught on camera. The victims, essentially, and the daughter and the grandson of the crypto businessman, narrowly escaped the kidnapping after the woman had her partner essentially resist before everybody else intervened and the essentially kidnappers got away without obviously taking them. So these are obviously major things to consider. This is why I always say, and there's a lot more onto it. Essentially, the French news, the France 24 news channel said, and this is what essentially was said, I will assemble business people working in cryptocurrency companies, and we have a few of those in France at the Interior Ministry to work with them on their security so that they do become aware of their risk inside of that market space. And so many people are being targeted right now. Crypto influencers who show off too much are being targeted right now inside the crypto space. Crypto company CEOs have been targeted. Ledger's co-founder was targeted once as well. So a lot of crypto CEOs, crypto founders, crypto influencers who show off their bank balances, their trust wallet balances and so on online, are also being targeted. So this is why I always say, just keep it hush hush. If you have now the company CEOs and so on for crypto companies, they can't do much about it because their information is public of being the co-founder of Ledger, for example. But if you are a crypto influencer and you have a massive ego to show off to the entire world your trust wallet balance, just don't do it. Put your ego back inside your box and just essentially keep silent for your own safety, is all I'm saying, because the situation is getting out of hand when the French minister has to get involved. Now, South Korean presidential candidates is what we're going to talk about next. So, same way we talked about essentially Kazakhstan aiming for becoming the crypto hub of the Middle East. South Korea, this is how you know crypto has become a very, very high talking essentially situation when all of the three candidates to become the next essentially president of essentially South Korea, or all three of them are saying crypto is their top priority. Remember the days when crypto wasn't a priority? It was laughed at and mocked at. Now we're getting to stages where all three presidential candidates of a country are saying crypto is their top priority. All three major South Korean presidential candidates have publicly expressed support for legalizing ETFs ahead for their June 3rd election. According to essentially CryptoCon's founder and CEO Ki Young-ju, currently both Bitcoin ETFs and institutional crypto investments are banned in South Korea, resulting essentially in a market where 100% volumes comes from retail investors. The institutions want to be involved inside the crypto space as well, but they can't due to some heavy restrictions. Now, the Democratic Party leader Lee Jae has promised to legalize crypto spot ETFs and reduce transaction fees and create a safe investment environment so that young people can build assets and plan for their future. According to a report from the Korean Economic Daily, his campaign joins a similar pledges from People Power Party candidate Kim Moon and new Reform Public Party candidate Lee Jong, marking a first presidential race where digital assets have taken center stage in policy proposals. So in the past, the center stage policy proposals were, let's keep the country safe, let's decrease inflation, let's lower the prices. But the top priority for all three of these candidates who want to become the next president of South Korea is crypto. The number one category is crypto. This is amazing to see, to be fairly honest, because it shows confidence towards the crypto market space. It shows that, whoever is chosen is going to become very pro-crypto. More liquidity is going to be added to the table towards, global crypto stage from South Korea. South Korea brings a lot of money towards the crypto space, and the money that they're bringing in is retail section money, but they're still bringing a tremendous amount of money. Imagine if they brought in institutional money. Now, South Korea's current regulatory stance contrasts sharply with recent global developments in cryptocurrency investments and products. While the United States approved spot Bitcoin ETFs back in January 2024, and Hong Kong launched Asia's first spot Bitcoin ETFs back in April 2024, South Korean investors remain limited to direct cryptocurrency purchases through exchanges. The country's restrictive one exchange, one bank policy has further constrained market developments by limiting essentially cryptocurrency exchanges to working with only one bank for real name verification, as noted essentially by Cointelegraph. Despite these limitations, South Korea has emerged as a significant crypto market with an estimated 16 million cryptocurrency investors, representing approximately 36% of eligible voters, according to Analytics Insights. Economic sanctions have imposed essentially by the West have catalyzed a rush towards a neutral currency outside the preview of any single nation state, explains financial analyst Min-Jin Park from Seoul National University. South Korea cannot afford to fall behind in this transformational shift that's happening inside the digital space. South Korea's cryptocurrency regulation has evolved significantly since 2021, when the Act on Reporting and User Financial Transactions and Information first extended anti-money laundering essentially requirements to virtual asset service providers. Most recently, the Act also on the protection of virtual asset users came into force in July 2024, establishing stronger consumer protection and market oversight. The Financial Services Commission, FSC, has announced plans to introduce a second phase of cryptocurrency legislations in the latter of 2025, focusing on issuance, distribution, and stablecoin regulations, according to the bloc. That could also happen by the end of 2024 as well. This upcoming framework aims to take a comprehensive and systematic approach that encompasses service providers, crypto users, and crypto markets, as stated by the FSC Vice Chairman, essentially Kim So-young. The current administration's failure to follow through on previous promises to legalize spot crypto ETFs has become a central campaign issue. The ruling People Party came to power in 2022 with essentially pledges to lift the ETF ban and revise the controversial essentially one exchange, one bank rule, but failed to implement these changes before President Yoon's impeachments. The approval of a spot Bitcoin ETFs and other ETFs in South Korea could transform South Korea's cryptocurrency landscape by introducing institutional capital inside the market space, what is currently a retail-dominated market space instead. By the way, being a currently dominated retail market section for the crypto space in South Korea, XRP is the number one token to go to. This shift would likely increase market liquidity, reduce volatility, and potentially narrow the kimchi premium in historically higher cryptocurrency prices in South Korea compared to global markets. Institutional entry could stabilize these volumes over time, reducing retail-driven price swings. Also, notes came from Blockchain News. Market analysts project that the legalization of crypto ETFs could attract significant capital from pension funds, for example, insurance companies, and other institutional investors previously restricted from cryptocurrency exposures. For example, in the US, there are pension funds that essentially went towards Bitcoin ETFs from BlackRock and Franklin Templeton and so on. For individual investors, ETFs will provide a regulated alternative to direct cryptocurrency ownership, potentially reducing technological barriers to entry and security concerns associated with self-custody. This accessibility could further expand South Korea's already substantial cryptocurrency user base. South Korea has a tremendously very big crypto user base. It will get a lot more bigger, obviously, on this sense. But what's impressive is typically for a presidential candidate race, whoever becomes the president of the nation, it's always been about essentially, if you vote for me, I will keep the country safe, lower inflation, essentially create more jobs. But the number one category, the center category for all three parties or three candidates that want to become the next leader of South Korea, the number one talking point was cryptocurrencies. That is impressive to see. It really does show how much power crypto has now. When three candidates' talking points, center talking points, are cryptocurrencies rather than keeping inflation down, keeping prices down, keeping the country safe, which is typically what politicians say, but never do. But crypto is their talking point. That's one thing they're going to do because that brings in money, and that's all politicians care about from fees. Now, moving on essentially from South Korea, because they are going to be adding a tremendous amount of money to the table once that happens. Senators in the US are going to be doing something quite good, actually, for the crypto space, for crypto companies especially as well. So, senators inside the United States are pushing for a crypto tax exemption. Senator Cynthia Luminous and Bernie Monroe have called on the US Treasury to exempt unrealized cryptocurrency gains from taxation, potentially impacting US digital asset companies. Crypto tax reform impacts US companies' competitiveness in volatile, essentially digital asset sectors, possibly essentially driving investments offshore if essentially unresolved. Senator Cynthia Luminous and Bernie have urged the US Treasury to exclude unrealized crypto gains from tax calculations under the corporate alternative minimum tax. Luminous has been a prominent advocate for crypto regulation, sponsoring various reforms, and Bernie, essentially newly elected, has supported the proposal, underlining his baptism alignment in pushing for crypto tax reforms. Senator Cynthia Luminous essentially said the current tax regime risks pushing digital assets firms abroad and hindering US competitiveness. So if US companies want to obviously pay virtually no taxes or less taxes on their crypto's gains, they'll just move them offshore accounts. She's saying if we do a tax reform, those US companies will bring their crypto assets back into the US because they're not going to get taxed on them, on their unrealized gains. Both senators emphasized that taxing unrealized gains imposes a competitive disadvantage on the US companies compared to foreign rivals. Business holding substantial crypto assets like essentially Bitcoin and Ethereum are affected by this tax regime, prompting calls for change. If passed, the proposal might increase US corporate participation in crypto markets because US companies will see it as if they buy a crypto project, then they earn essentially gains on that crypto project. They're not really going to get taxed for their gains, which could essentially and should increase a lot more liquidity towards the crypto market space. The initiative could lead to a greater institutional engagement in digital assets, marking a shift in regulatory landscapes. The proposal reflects a growing recognition of crypto economy's role. Historically, President show similar tax essentially clarifications, bolstered business confidence and market participants. If adopted, the reform may drive essentially positive shifts in financial and regulatory environments concerning digital assets. This is a great thing to see, honestly. It's something that should have been done a while ago, but let's just see now. Now, Morgan Stanley is what we're going to talk about next. But honestly, the tax reform is a brilliant thing to see because France, for some moronic reason, decided to tax, or is thinking about still, taxing its citizens on their unrealized gains. So if you hold a crypto project and you gain quite a lot on it, France is thinking about taxing their own citizens on that, which means you would either have to sell your crypto project, which you're going to make a loss on, and to pay your taxes, which is a very stupid thing in taxing people or companies on their unrealized gains. If they remove that, then a lot more companies will get involved in crypto projects and crypto assets and so on because they know if they make gains on it, they're not going to be paying taxes on those gains. And also, comparatively, you can, compete against countries like the UAE. You don't do that either. And obviously, liberals and Democrats will somehow turn this into bad news. And if this gets passed, they'll say, oh, Trump isn't going to be taxing the companies on their crypto gains, is what Democrats and liberal news crybabies will be crying about as usual. But they don't realize the bigger picture. If companies and the retail section don't get taxed on their unrealized, on their gains, then more liquidity comes towards the table. So prices go higher for crypto projects. And that's the positive. But those the liberals and Democrats will spin it the other way and say, oh, companies don't pay tax on their crypto gains because of Trump. Billionaires become billionaires again. You know how they spin it on the news. The reality of it is it's actually better for us because more money comes to the table from institutions, which means the projects that we're holding go higher up. But the liberals and Democrats will cry about it, spin it the other way around. Now, Morgan Stanley. Morgan Stanley's digital asset chief departs to launch a tokenization startup in Switzerland. So, more institutional work towards the crypto sector. Peel, who has led the bank's digital asset strategy since 2018, was pivotal in integrating crypto into the institution's broader financial offerings. His departure marks a significant moment in the continued migration of Wall Street's talent in the blockchain and decentralized finance DeFi ecosystem. Despite the volatility, I've always had a strong conviction that Bitcoin and other quality crypto assets would become relevant for traditional finance, Peel wrote. The success of spot Bitcoin ETFs and the US regulatory shift has more than validated that belief that he essentially has. Peel's next chapter centers essentially around the launch of a crypto startup based in Zug, Switzerland, often referred to as the Crypto Valley in Switzerland. For its blockchain-friendly regulations and concentration on essentially Web3 innovation, the company will build products designed to bridge traditional finance and decentralized finance by tokenizing real-world assets. As real-world assets move on-chain, TradFi, traditional finance, will follow. Peel told the block in a direct message. Building the infrastructure and products to meet them, there is how we realize the future of on-chain finance. Peel also emphasized the growing appetite from institutional capital to tap into DeFi yield opportunities, and also forecasted that traditional financial institutions will increasingly essentially engage with decentralized infrastructure. Peel essentially transition reflects a larger trend in which traditional finance executives are turning towards essentially blockchain native initiatives spurred by raising regulatory essentially clarity and growing institutional participation in digital assets. His leadership at Morgan Stanley helped position the bank at the forefront of institutional crypto wave, aligning its services with emerging demand for custody, ETFs, and other crypto-linked products. So, this man who has led Morgan Stanley inside of his crypto wave for the longest time, and has actually made Morgan Stanley go towards ETFs and other sectors of the crypto space, has decided to leave Morgan Stanley after helping Morgan Stanley reach the level they're at inside the crypto space, which is an amazing level, to create his own company named Peel, which aims to build the next layer of infrastructure that will enable global financial institutions to securely interact with tokenized assets and decentralized applications. His company is going to be based in Switzerland. Zug, and this man was essentially in one of the head leadership roles at Morgan Stanley, who helped Morgan Stanley get more involved inside the digital essentially sector as well. So now, essentially, just to give you that, that small backbone again, Peel, who has led the bank's digital asset strategy since 2018. So if you want to go and check that project out. Peel, Switzerland, Zurich, Morgan Stanley. Now, Standard Chartered is what we're going to talk about next. Standard Chartered Bank has partnered with another company to expand inside the crypto space. It's great to see when banks, essentially form any sort of crypto partnerships, because more liquidity is all I see that in the long term. Standard Chartered partners with Falcon X for crypto expansion. Standard Chartered Bank has partnered with digital asset broker Falcon X, as reported essentially by CoinDesk today. Falcon X will use Standard Chartered's banking infrastructure for operations in Singapore, expanding to other regions as well. The partnership signifies a major move in the Standard Chartered's crypto ventures, aiming to boost its digital asset services across Asia and beyond. Standard Chartered Bank recently announced a collaboration with Falcon X, aiming to enhance institutional cryptocurrency services. Falcon X, essentially for the first time, partners with global traditional banks to leverage its infrastructure and foreign exchange capabilities, with Singapore and other countries ahead of itself. This trade collaboration aims to expand into the Middle East and the United States, improving cross-border financial solutions. This development essentially intends to redefine Falcon X's ability to offer robust trading and foreign exchange solutions in crypto markets by incorporating Standard Chartered's broad suite of global services. Liquidity and settlements, essentially efficiencies, are expected to improve substantially for crypto institutional clients. Matt Long, General Manager, Asia Pacific and Middle East, Falcon X. We are pleased to essentially partner with Standard Chartered Bank, one of the most forward-thinking and global banks in the digital asset adoption. At Falcon X, we support trading and financing for some of the world's largest institutions in digital asset markets, and essentially this relationship strengthens our ability to deliver a robust banking essentially and FX solutions to clients to rely on us to operate inside the crypto market space, was a statement made by Falcon X on this new venture partnership. Institutional partnerships such as this visited enhanced physical and technological integrations between traditional banking systems and also digital essential assets. The move is expected to incentivize further adoptions amongst institutional players, placing banks at a pivotal role in the crypto finance ecosystem. Amazing to see. This is why I keep on saying, and not just me, and such as CEO of Grayscale and the analysts from JP Morgan and Franklin Templeton, Goldman Sachs, and even Standard Chartered Bank themselves, I keep on saying what we're going to be having isn't your typical run. It's the institutional regulated run we're going to be having inside the market space. These are all indications and signs of that very regulated institutional utility crypto run we're going to be having, mostly for the financial sector of the crypto space out of all the categories. Now, moving off that, regarding Standard Chartered Bank, to Murtic, S&P Global. So more on the basis of crypto expanding with the traditional market sense. Murtic, S&P Global successfully tests digital asset risk frameworks. So one of the things with crypto space is that if the traditional financial space wants to use the crypto space and expand on the crypto space, is that they need to make sure it's heavily secure, because the last thing you want is a bank being compromised or a company becoming essentially compromised. So Murtic and S&P Global Ratings complete a blockchain risk framework proof of concept, enhancing risk transparency for digital assets. Murtic and S&P Global initiated a joint project to enhance blockchain risk management. Leveraging Murtic's tool, they aim to integrate digital asset risk with traditional essential systems, promoting institutional adoption for blockchain. The collaboration with S&P Global allowed essentially digital finance risk to emerge as a measurable entity, reinforcing transparency and real-time data integration. This collaboration saw institutional-grade risk evaluations being expanded into blockchain networks. The collaboration with Murtic allowed us to explore how digital finance risk can be systematically measured, ensuring transparency and data-driven insights as digital assets become more integrated into the mainstream adoption. Said essentially the head of strategy, digital economy at Moody's Ratings. Moody's is a very big deal. Industry essentially stakeholders underscores the potential for increased trust in digital finance due to these essentially advancements. The integration is also expected essentially to encourage traditional financial institutions to deepen their engagements with digital assets. This framework enhances financial transparency and risk also management across multiple blockchain assets. Analysts suggest that these developments could lead to a new institutional funding streams by bridging traditional financial systems and digital asset infrastructures. Is definitely going to, as they said in their own words, bring a lot of money to the table. Previous initiatives similar to this framework often simulated medium-term confidence in major cryptocurrencies, such as collaborations, typically result in strengthened trust and participation from traditional financial sectors. The traditional financial sector does rely on Moody's, for example, on their rating systems and so on. With Murtic and the S&P Global and Moody's essentially pretty much coming together to rate the crypto space, one by one in terms of their security purposes of blockchains, it's a great thing to see. The higher the rating, the more confidence it shows for the crypto space, and essentially the more confidence traditional financial companies have towards joining particular crypto projects due to their ratings in terms of their safety. Now, using historical data, essentially, experts suggest that the enhanced tools may drive more secure and informed decisions in investing. As observed, increased institutional participation often correlates with improving cryptocurrency valuations and innovations. So it honestly is an amazing thing to see. These are another indication of crypto space connecting to the traditional market space, which is what we like to see, because traditional market space has the money which we want inside the crypto space. Now, Ripple is what we're going to talk about next. Before we talk about that, let's go. No, we're good. Okay. Actually, before we talk about the next news, let's go to the comment section first, and we'll go straight into the next news. So let's see where we're at inside the comment section. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. So let's see where we're at inside the comment section. We were at here. I read everybody's comments one by one as well. Ghost Runner, good morning, Miles' family. Good to see you, Ghost Runner. How you doing, guys? See you back. Let's go, Ghost Runner. We were here. I read all this. If Elizabeth invests in S&P 500, she's investing in crypto now. True, very true. Ben, weird comment to put. Ian, JP, Ghost Runner, Mike, let's go. My new kitty. Yes. Curtis got a new cat. It's called Ripple. Now, Ripple executives is what we're going to talk about next. But we're also going to just add a little bit on top, which is, as I said, Trump being in the Middle East, making those deals happen for the United States, and essentially to bring that confidence back towards the market space, that stabilization we need inside the market space. Crypto CEOs alongside Trump have also went to the Middle East and did their own deals. So here it is. Ripple executives meet in Dubai with authorities. Ripple is reportedly having a conversation with essentially Dubai's authorities to discuss payment infrastructure and building innovation. Ripple represents, including essentially President Monica Long, met with the UAE officials during Dubai's FinTech Summit to explore ways to strengthen the region's digital payment systems. Ripple said, "Our president, Monica Long, had the honor of meeting with His Highness Ahmed bin Saeed at Dubai's FinTech Summit. We continue to essentially be impressed with the leadership demonstrated by Dubai as it establishes itself as one of the world's leading hubs for digital assets. This comes just 2 months after receiving a license from Dubai's financial service authorities, the DFSA, to offer regulated essentially digital payment services in Dubai's International Financial Center, which is the DIFC. Ripple announced getting its approval back in essentially March 13, 2025, making essentially it the first blockchain-powered payment provider to be officially licensed in the UAE. Ripple was essentially genuinely was officially the first ever project to receive a payment license in the UAE. Ripple was the first one. Now, it was Ripple's first regulatory license in the Middle East, and it allows the tech firm to expand its digital asset payment offerings in one of the world's top financial hubs. The company said this approval essentially supports its global of essentially offering fast and affordable cross-border payments using blockchain technology. They also said, "We are entering an unprecedented period of growth for the crypto industry," said Ripple. CEO Brad in a press release. Brad further added the UAE is exceptionally well balanced to benefit, and Ripple believes that the UAE's early steps in creating friendly rules for crypto innovation helped make this possible. Besides Ripple's entry into the DIFC, crypto essentially it comes at a time when the UAE is viewed as a hub for international trade in terms of cryptocurrencies as well. Ripple's network currently handles over $400 billion in cross-border transactions, and there are several traditional finance firms and crypto companies in the region also looking for answers to slow, expensive payment systems. And Ripple seems to be the one that's answering their questions. According to Ripple's 2024 survey, 64% of finance leaders in the Middle East and Africa see faster payments as the biggest benefit for blockchain-based transactions. 64% see essentially faster payments as the biggest thing when it comes to blockchain technology. Ripple first set up its Middle East headquarters back in essentially 2020. Since then, it has essentially grown its presence steadily. Today, nearly 20% of Ripple's global customers come from this region. The new license essentially will allow Ripple to build on that base and grow further. Reese essentially Merrick, Ripple's managing director for Middle East and Africa, said, securing this essentially DFS license is a major milestone. We're ready to hit this ground running. Meanwhile, this approval adds to Ripple's growing list of regulatory wins around the world. It also already holds its licenses from Singapore's MAS, Monetary Authority of Singapore, New York's Department of Financial Services, Ireland Central Bank, and multiple US states Ripple has a license in. Ripple is also promoting the use of its own stablecoin, RLUSD, which launched in December and has already reached over $316 million in market cap. His Excellency Arif Amir, CEO of the DIFC authority, said Ripple's move is a strong sign of Dubai's support for financial innovation. This is what essentially the CEO of DIFC authority of the UAE government said for Ripple. They said Ripple's move is a strong sign of Dubai's financial innovation. They said this milestone not only highlights our commitment to fostering innovation, but also opens the door for Ripple to tap into the growth opportunities. The CEO of DIFC authority of the UAE government said that about Ripple, that essentially this milestone not only highlights our commitment to fostering innovation, but also opens the door for Ripple to tap into new growth opportunities in where? The UAE. If you ever had doubts in Ripple for some oddly reason, you shouldn't. Because those are words, not just those words, but in general, Ripple is, in my opinion, an excellent company, excellent foundation, incredible project. They're going to lead the way in finance one way or another. Whether people like it or not, they're going to lead finance. And those were the words that were essentially said by the CEO of the DIFC authority of the UAE, that this milestone not only highlights our commitment to fostering innovation with essentially Ripple, but also opens the door for Ripple to tap into growth opportunities. Ripple is the only one that has this essentially official a full-on license, and was the first one to get this full-on license also. And to point all that, this past week that I've essentially missed doing this live show because of, if anybody else tuned in a bit late and was wondering why essentially I haven't went live for the past week, if you want to do so, is because I had essentially an infection that spread to my lower back and to my lower spine, to be fairly honest, and I wasn't able to walk or sit down or even lay down because of the infection that spread to my lower back spine. And if the medication the medication that was prescribed didn't work, then I would have to do surgery afterwards on my lower back spine, which thank God that I didn't need to do that, and essentially the medication completely solved the issue. But that's why essentially I missed the last week. Now the reason I'm mentioning this is because this last week that I've essentially missed doing this live show that I normally do Monday to Friday, 11:25 p.m. UK time onwards, a lot of things have happened. A lot of positive things have happened inside the crypto space. A lot of positive things in terms of the US and China, US and the Middle East, and the contracts that's been happening domestically or internationally, the regulations. What I'm trying to say is prepare yourself, because we are heading towards not your typical alt season, but we are heading towards a very regulated institutional run is what's really happening right now. And on that final note of Ripple, regarding Ripple, UAE, if you're somebody that's having doubts on your Ripple or on your XRP or anything like that, you shouldn't be. In my point of view, not being biased in any sort of a way, but number one financial project, I'm saying financial project because it's not a gaming project or a AI project and so on, but number one financial project is, in my opinion, in my perspective, XRP by a mile. There is no other crypto project that compares to XRP, in my point of view, or to the XRP ledger when it comes to finance. Any other category, gaming, AI, whatever, sure, they'll take the rankings. When it comes to finance, by a mile, XRP has the rankings as number one. And those words from the CEO, essentially, of the DIFC authority of essentially the UAE, the government saying Ripple has opened doors for growth inside the UAE, are big, very, very big words, very bold words is what I would have to say. And it is also the endings of tonight's live. That was the last news of tonight's live. And on tonight's live, we talked about essentially Ripple having the keys to open doors in the UAE. We talked about essentially Mertic and S&P Global coming together to secure the crypto space, so more traditional market spaces enter the crypto space. We talked about Standard Chartered Bank expanding its range inside the crypto sector, especially in Singapore and other Middle Eastern countries. We talked about Morgan Stanley, essentially, in terms of their digital asset chief, creating its own crypto project. We talked about senators inside the United States pushing for crypto tax exemptions inside the US, which is what we love to see. We talked about essentially on tonight's live regarding South Korea's candidates who want to become president. Their top priority is cryptocurrencies rather than any other talking points. We talked about on tonight's live regarding French ministers summoning crypto CEOs for a specific reason. We talked about Van Eck launching its ETF for on-chain economies for ETF crypto companies. We talked about essentially on tonight's live regarding Kazakhstan's essentially leaders aiming to make Kazakhstan the crypto hub of the Asian market space. We also talked about tonight's live regarding Ethereum Foundation launching a $1 trillion security initiative. We talked about how JP Morgan is moving off Ethereum in a way, going towards Ondo Finance, essentially, and Chainlink for tokenization. We talked about Democrats, for some oddly reason, demanding that essentially Trump reports its crypto holdings. It's strong words coming from Democrats because Democrats are thieves. If you ever want to see daylight robbery, the term daylight robbery, it only applies to Democrats, the Democratic politicians, to be fairly honest. We also talked about Blockchain Association chooses CFTC summer to lead the way for themselves in terms of crypto lobbying. We talked about Tether unveiling their new AI projects. In terms of health as well. We talked about SEC decisions being delayed and other SEC ETF decisions that are coming up. And we talked about China and US relationships and the markets in general. So a lot of things we covered on tonight's live. And honestly, I'm so happy to be back. I'm so happy to be doing the live shows again. This was episode 307 of the CMF Live. Episode 308 will be tomorrow. If you're not following already and you're watching this, subscribe, follow, retweet, like. If you haven't done all that already, I'm so happy to be back. And honestly, thank you so much to everybody from the CMF who essentially called me and messaged me to see how I'm doing. Thank you so much to every single one of you who messaged me from the CMF and called me to see how I'm doing as well. Absolutely amazing. Love you all. Let's go inside the comment section before we do go. Let's see where we're at. Callie says the government are always useless, but the French one is top number one. Rather than to introduce interesting innovations, it's easy to tax and then drink the steam. It's smart. Yeah, I agree, Callie. Comatose says, hello, Brother Miles and family. Welcome back. Wishing you good health moving forward. Let's go, Comatose. Thank you so much. Thanks, Legend. So happy you're feeling better and the medication worked. Great to have you back doing the live and providing us with wonderful insights as always. Thank you so much, Shelley, for the kind words. I'm so happy to be back as well. Night, Miles and CMF. Pablo, see you tomorrow, same as usual. JP, good night, Miles, and all CMF. Thank you for a great live and news, and glad you're back. Let's go, JP. See you tomorrow, but at the same time as usual. Good night, Miles and CMF. Happy to see you back. Let's go, Mike. See you tomorrow, but at the same time as usual. Good to see you doing. Very good to see you doing well. Good show, great information as usual. Let's go, Curtis. See you tomorrow, same time as usual. Mickey, thanks, Miles. Happy to see you again at CMF. Family to the moon soon. Let's go, Mickey. Facts. Ian, good night, Miles and family. Great live. Many thanks for all you do. Respect, brother. See you tomorrow. Ian, see you tomorrow. Same time as usual. Thanks, Miles. I'm so happy you're feeling better, but please take it easy. If you need a break, make sure you take it. Let's go, Ghostman. I definitely will. Good night, Miles. So great to have you back. Words of wisdom from a legend. See you again tomorrow. Let's go, Autistic. See you tomorrow, same time as usual. Great live. Great to see you again. Everyone like, share, and leave a comment for support. Take care, Miles and CMF. Let's go, Ray. Facts. If you haven't already done that, CMF members, or if you're watching this for the first time ever, drop a comment, drop a like, retweet. Thanks, Miles. So glad you're doing well. Good night, everyone. Let's go, Stormy. See you tomorrow, same time as usual. I will be seeing everybody tomorrow, same timing as usual, 11:25 p.m. British summer time or GMT time, London time, in other words. I'll see everybody tomorrow, same time as usual, for episode 308 of the CMF Live. Follow, like, comment, share, retweet, subscribe if you already haven't done that. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See you tomorrow, everyone.